Hello everyone, welcome to the channel. And for today, after the CPI and job claims data for the United States shaking the markets of course and violating some of the crucial levels that we were tracking during this week. Let's start with the DXY. We were expecting a move towards the 105.30, the 38% Fibonacci retracement level. The market has found new fractal support at 105.20, and since then the market starts to approach the previous lows again. Before the CPI data and the job claims for today, the market was trading near this fractal support level, threatening the violation of these levels of course, and the CPI data triggering these moves to the downside for the dollar. We are now facing the 88.6% Fibonacci retracement of all this swing to the upside, so this is a full retracement after this move to the upside for the dollar, and we are now approaching the weekly fractal support. It's also important to understand on a daily time frame the major structure that we are facing for the DXY. This major support is very important. I believe if the market breaks this level, there is a big window below these levels towards the next support level. We have also a minor support at 102.34. It may be important. It may also converge with the 61.8% Fibonacci level. Let me just confirm that. Almost there, 61.8% at 102.85. So pay attention to this fractal support level. It's also important, but again, the major support, major monthly fractal support, 160 cents. That's the major window opened for the DXY. If somehow, and again, let me underline this, if the price breaks below this level of support, the weekly fractal support at 103.99. Let's jump into the euro versus the dollar, the fiber. I was expecting some pressure at this trend line resistance. As we can see, we are now breaking above this structure, which opens the door not only to a retest of the weekly fractal resistance level, but also opens the door for inverted with the DXY, a retest of the monthly fractal resistance. So if somehow the market finds a way to break above this weekly fractal, we should pay attention to a move towards this major resistance level for both the DXY and of course inverted with the euro dollar. Something else can happen in terms of patterns. This is a major resistance level. If somehow the price starts to pull back, this can open the door to an head and shoulders pattern formation. We can see this as a potential head and shoulders with the neckline as a weekly fractal resistance. We have the head as a new fractal support level. If somehow the price reinforces these resistance levels and then starts to pull back, this can open the door for an inverted head and shoulders pattern. In order to track the possible reward, let's say the target for this pattern, I advise you, I suggest you to change into a daily, into a line chart and project the default targets based on the 200% Fibonacci extension of this swing low. So between the left shoulder, the highs of the left shoulder and the neck, let's say, or the first reinforcement of the neck and resistance level to the head and the support projected above. So we target the 200% Fibonacci extension level, and if somehow this pattern starts to unfold for the euro versus the dollar, we have targets for that pattern exactly at the monthly fractal resistance level, as we can see. So this was kind of a live projection for the head and shoulders, for the eventual head and shoulders for the euro versus the dollar, the fiber. Let's see if that will unfold or not. We have also the dollar versus the Mexican peso. Let's go into a lower time frame. We are tracking this possible ABCD pattern. As I mentioned before, we have a symmetrical pattern projected for the Mexican peso at 17.45, so that's the default symmetrical projection for an ABCD pattern. So we still threatening the major support 17.85, and we still tracking that possibility. Actually, after finding resistance at the golden Fibonacci retracement level, I always, specifically after forming a new top, of course, I always track the possibility of a symmetrical projection from this golden Fibonacci level. That's exactly what's happening after finding resistance around this 61.8. The market unfolded into this bearish momentum, and we still track the possibility of a bullish ABCD pattern for the Mexican peso. Now, I also want to call your attention to some of the Japanese yen pairs. Let's start with the dollar versus the Japanese yen. We have also the Aussie, the pound, the euro, New Zealand, and the Canadian dollar versus the Japanese yen. I want to cover some of these patterns with you, but you need to stay focused on a higher time frame. You need to go into a monthly time frame chart in order to understand my views for some of these Japanese yen pairs, which has been very strong moves to the upside. As we can see, a bullish momentum to the upside since the early years of 2011, and most recently, actually, if you track this previous support for Mars, triggering this strong bullish move to the upside. Now we are facing the highs of 1990s, so basically we are facing previous structural resistance at 160.16. This is the major resistance at this point. If somehow the price starts to react to these levels, we should pay attention to a deeper pullback towards the Fibonacci retracement levels, 141.54, 128.92, the default target for that pattern. So the default target for the BAT pattern, it's always a 38% Fibonacci retracement level. So if some reason the market starts to react to these levels, don't get surprised, because we have an alt BAT pattern actually suggesting that potential pullback. Of course, if that doesn't happen, we may see the dollar versus the yen continuing into this uptrend or this bullish momentum. If that happens, the next level to pay attention to will be the golden Fibonacci level 192.06. That's the golden Fibonacci extension level. So, but for now, of course, we are far away from those levels, and we still threatening these levels of resistance, and we're still facing basically the bearish alt BAT pattern for the Japanese yen, the dollar versus the Japanese yen. So let's move forward and check also the Aussie versus the yen, because most important than the dollar versus the yen, because the dollar versus the yen already completed the pattern a few months ago, actually in April. Only now the Aussie versus the yen completed the bearish shark pattern. Let me erase this one for now. So we are now tracking this bearish shark pattern at 109.27, and that pattern also points to actually suggests retracements, and usually the retracement for the bearish shark pattern relies on the 50% Fibonacci level, which points to this monthly fractal, the previous monthly fractal support level at 86.06. So that's the default expectation after the formation of this pattern. So as we can see, we are facing some significant patterns which may produce very significant moves to the downside, very significant retracements or pullbacks, if you wish, for those Japanese yen pairs. Of course, we can be wrong, and this is one of the situations where we have also the previous structure highs and fractal resistance levels exerting some pressure to the downside, but we can be wrong, and if we are wrong, the market will squeeze higher, and eventually we will be paying attention later to this 224% Fibonacci extension level instead of being attentive to this golden Fibonacci extension level if the price breaks above it. So that being said, we are now tracking this bearish shark pattern for the Aussie versus the yen on a monthly time frame chart. Okay, moving forward, we have also the pound versus the Japanese yen. Let me delete those patterns above the resistance levels. We are now facing a bearish alt bat pattern at 113% Fibonacci extension level, 205, 10 to 113% Fibonacci extension. We expect the pullback, so let me adjust these retracement levels. The default targets for the pattern: 38% Fibonacci retracement level, 175.61. Also another one that's suggesting another pullback, a significant pullback. It's a 14% pullback for this bearish alt bat pattern. Of course, again, we can be wrong and the market will squeeze, and the next level to pay attention is actually not the price to pay attention, but the cluster zone between 235.85 and 240.48, 161.8% Fibonacci extension level, and the 88.6% Fibonacci level of all this swing to the downside, pushed to the 88.6% Fibonacci level. So that being said, pay attention to these price reactions at these zones. I will expect a reaction to the downside after forming these patterns, but as I said, we can be wrong and the market will keep trading higher. Next, we have the euro versus the yen, another one with a bearish shark pattern, bearish crab pattern completed in gray. This gray pattern, golden Fibonacci retracement, golden Fibonacci extension level, 161.8 to 175. Daily fractal resistance under threat, 174.63. So this bearish crab pattern also suggests a retracement towards a 38% Fibonacci retracement level, in this case, as we can see, converging with this previous structure resistance level. Let's also observe that possibility for the euro versus the yen. The very same situation happens here. If the price can't print that pullback expected for the pattern, we may see the price squeezing higher, and the next levels to pay attention to will be the golden Fibonacci extension level at 216.76 or 73, the golden Fibonacci extension level. The next one, the New Zealand versus the Japanese yen, also approaching, actually nailing the golden Fibonacci extension level. This red swing, as we can see, this forms the bearish deep crab pattern at 99.13. So this is basically a bearish crab pattern, also suggesting a potential retracement or a pullback for the pair, basically targeting the 38% Fibonacci retracement at 83.95, which will also suggest the recovery of this major support level at 89, printed at 89.96. Let's observe also the New Zealand versus the Japanese yen. The very same situation here. If the price finds a way to break above the resistance, we may see a squeeze higher. We are talking about a 30% move above the recent 32% move above the recent highs if the market breaks higher. CAD versus the Japanese yen, another one facing the bearish shark pattern, 113.86, 224% Fibonacci extension level, push at a few points higher. We have a new fractal resistance, daily fractal resistance at 118.62. The Canadian versus the Japanese yen is another example with the price facing some crucial levels. We are far from the previous structure highs on the Canadian, but we have also this kind of an ascending wedge, and of course we have already support at 112.96. So if the price breaks below these levels, much probably will print a deeper pullback. Let's also check the SPX500, and for that let's go into a lower time frame, 4 hours time frame chart. Nothing very important to say for now. We have a nice ascending and parallel structure to the upside, but we are also facing the channel resistance. Until we stay inside this ascending parallel channel. If the market breaks below this channel, that may change the picture, and that may trigger our mindset to start to change, you know, and say you start to, okay, eventually the market will start to pull back after breaking this momentum. Let's jump into the dollar versus the Canadian, back to the Forex markets. And one of the reasons why I'm calling your attention to this is because we will also cover the crude oil, and it makes no sense to cover crude oil without covering also the dollar versus the Canadian. I also pointed before, actually I pointed two potential levels of interest. One of them 135.87, which we are now facing. This is a bullish crab pattern, the bullish shark pattern at the golden Fibonacci extension level. Don't ignore the potential bounce after completing this sequence. It's still possible to see the pair starting to recover from these lows. Nothing is impossible, but one of the patterns that I'm paying more attention to, and that I want to pay more attention if the price achieves those levels, it's the bullish shark pattern if completed at this trend line support for this descending channel. So we are inside a parallel descending channel. If somehow the price approaches these levels, it may offer me a much friendly risk-reward situation to get involved and to place some risk in the market. So we have also to consider the possibility for crude oil to trade higher. For the crude oil to trade higher, of course, we need to see the violation of the resistance, 84.74, but there's also something else that we should pay attention to. This is a cipher pattern completed at 84.64, and that pattern always targets the 38% Fibonacci retracement level. And when I say always, I say every time I see this pattern working, always target the 38% Fibonacci. And this is one of the cases where I will be very, very surprised if the price doesn't touch these $80.50, the 38% Fibonacci retracement for crude oil. If the market bounces from here and recover above this daily resistance, I confess I will be very surprised, because this bearish cipher pattern tends to work perfectly after, specifically after printing this initial reaction. I will not be surprised to see the price reacting lower from these levels. We have the 50% Fibonacci retracement now acting as element of resistance, so that may trigger that move expected to the downside. Of course, as always, I'd always like to underline this: we can be wrong, and if we are wrong, the price will trade higher, will break above the resistance, and will target the monthly fractal at 87.89. That being said, moving forward, and to finish with some other commodities, gold, silver, and natural gas. Gold is now facing the channel resistance, or what we may consider a regression trend channel. So this is a regression trend ascending channel. As you can see, we are facing the highs of this structure, but we are also targeting the monthly fractal resistance for gold. Both gold and silver should target the previous structure highs, in this case for gold placed at 24.50. That's my expectation. We have a bearish crab pattern, in fact, at 24.50, exactly at the monthly fractal. 161.8% Fibonacci extension right there, nailing the previous highs. So we have already a projected pattern at those levels, so I will expect the market to achieve those levels at some point near the future. The silver market, very much the same. I will expect an approach, a retest of these previous structure highs, and we have a bearish shark pattern, not the crab as on gold, but we have a bearish shark pattern projected at 32.25. So this is also the golden Fibonacci extension of the last swing low to the downside, of course. This swing low projected above. Golden Fibonacci extension that completes the bearish shark pattern right below the major resistance levels. Of course, I will expect some type of retracement after completing this sequence. And because we are also I was also tracking the natural gas, and I believe some of you still tracking and following this bearish momentum for natural gas. And just to remember, this is a very strong pattern. This is an edge and shoulders pattern formation. We see natural gas breaking below these lows at 246.89 and still rejecting to recover above these levels. Unless the price recovers above these levels, which may change my perspectives, let's say, I still believe there's a lot of room for natural gas below. So we have default targets for that specific edge and shoulders pattern projected at 1.80. Basically it's equivalent to a 78.6% Fibonacci retracement from these lows from February to the most recent highs of June, and the retracement of these moves towards the 78.6% Fibonacci level will put the price very close to the default target of for these edge and shoulders pattern formation. So for the commodities markets, pay attention to some of them. Gold and silver may threat the previous highs. It may take some time to achieve those levels. Of course, I'm not expecting the market to go in a direct line towards those highs. And natural gas in specific, pay attention to more or potential more moves to the downside, since we are now facing or tracking these edge and shoulders triggered below these levels of support. That's all for today. I want to update you with other charts later. Eventually tomorrow I will be posting other content for you. Stay tuned. Thank you for being here as always. I hope you enjoy, and I hope to see you in the next video. See you there.